Welcome to the commodities, and here we're looking at gold on the 1 hour chart. The B wave that we were looking for, we had this B wave over here before because we had a 3-wave structure here. Well, it was actually in 5 when I take a closer look at it, but it's still there in terms of the A, the B and the C here. So we should see a push up from here. Would it get any more complicated than it is? I don't know, but one of the other points too that sort of overshadows the wave count is that we're under 1300. So until 1300 becomes the support, you wouldn't go long anyway. So you shouldn't be trapped in this situation. On the short side, we wouldn't really be interested in shorting this in this particular fashion unless the 272 here, the 1272, became the retested resistance. It'd be different if the market was coming down from the high here. We had a bounce on here and it moved up, then through, then retested, then we'd look for the short here if that retest was on lower volume. So anyway, we're just waiting for wave C to move up higher there before we look for any short side there. But it's a corrective rally. It has weakness to it. Is the Fed's meeting today at well, must have just be having it now, so that may affect it as well. So anyway, we're just nothing really cooking there at the moment. The copper market has, if I can just find my daily chart here. I mean, originally, we were looking at this being, well, a wave 4 here, and still possibly the case. It's just that it moved a little bit high, but it never really overlapped wave 1, which was this one here, not to worry about the A wave at the moment. So we've always been looking for a wave 4 here, but the picture you can see here can also be viewed as a wave 1, because in an odd way we can see the wave 1 up here, wave 2, 3, 4 and 5 here. It doesn't count that way very well internally, because this move that we were looking for up here to start with was in 3 waves here, and we were looking for 5 waves for that to finish, and that wasn't the case. So we need to look at this as being more corrective, still within the wave 4 here, and if that's the case, then wave 5 will take this low out through here, but we wouldn't be interested in that in a short trade unless the 300 became the retested resistance. And this move down through here, we can expect that to come down to 298, and let's have a little look at that. And this is the way that I've had to count it in terms of a little A wave, a B wave, then 1, 2, 3, 4 and 5 here for the C wave, and would have to label that X. And then this one here, an A and a B and a C here for the Y. And because I had to count it X, Y, Z, which I don't normally like doing, the simple reason is that the X wave is something that Proctor added on to the wave count. It was never really there with the Elliott, so not that I'm a purist or anything, but I just like to keep things as simple as possible. But the situation here is that the move up through here is in a very clear 3 waves here, and now we've got overlapping wave structures here. I mean, it still could be a wave 4 down here, but when I look at this structure here, it's coming down. It's not complete yet, and it's likely to come down further. Yes, it's got, there's plenty of support here at 300 in the trend line, so we'll see how that sort of goes. But we're sort of back at the original count of having this as a wave 4 here. I just thought that if we got a 5th wave up here, it'd be taking it too high at that stage, but we've only got 3 here, so really it's a double zigzag here as a wave 4 here. So anyway, let's see how that sort of works out. But what this will do will put pressure on the materials sector. The BHPs, the Rios will see further downside there. The oil market, pretty much according to plan, really. We had a bit of a we had 2 wave counts for the wave 4 here, but it wouldn't be pulling back any further than the wave 4 of one lesser degree, which we understood. But the move down through here is in 5 waves, so we'll be looking for the retest of 100 here. So we are looking for a low. On the daily, we're deeply oversold here, so we're going to be seeing this grip into here for a while here, and the same with the Brent as well. Even if I can just bring the Brent across here on the 2-hour chart here from the 1100 here, you can see a nice clean 5 waves here. So we'll be looking for a counter trend back up into this area through here. The gas market is on track to move higher. We were looking for yesterday when we spoke, we were counting this one up here on the hourly chart as 5 waves, and we're looking for an A and a B and a C to come back. Now, this ABC might get a bit bigger and uglier in terms of that being the B wave here, C wave here, and the A wave here. Let's just see how this progresses here. Support on the 480 would get you your next entry in through to here, and we'll be looking at $5 to the upside here. So it's really a question of, is this correction here finished? It's about the right size for this particular move up through here, but it could get a little bit larger, but because it's breached this high here, well, B waves can do that anyway, so it's not really helping us, but we don't have a clear 5 waves up here. It's more like 3 waves up here, so it's just to be able to call it a B wave at this stage here. But look, support back on the 480. Excuse me, and we'll be looking to the upside. The soybean market, all the grains, we're moving into the July contracts now, 1st of May now, so yeah, and even with orange juice as well. Now, look, I won't go into the bigger picture here, but on the soybeans, but we are expecting a larger correction across the 1500, but in seeing this little pattern occurring across the 1500 here and finding support here, I think it's sort of important that we look at taking a long position and finding a nice solid support in the next session on 1510 would trigger that. So that's something to look for, because this little move down through here is in 3 waves. So it's a retest in 3 waves of 1500. So it can give us, you know, ignite a trade there. So let's just wait for the 1510 in the next session to become support and glean one, just do one position, because we may have to get out of this trade here. It's not like we've got a really good setup across the 1500 in the bigger pattern. You know, we could go up to the 1530 here and then collapse here. So we'd be getting a position here and leaving the stop just under the 1500 there. 1496 should do the trick. Yeah, the wheat market as well, and with the wheat market here from this look, just to go back over the picture a little again here, we're basically looking for wave 1 up to here. We've got an A and a B and a C for wave 2 here. We know that this wave 2 could get a bit more complicated in terms of an A wave down to here, an A and a B and a C wave here in 5 waves for the larger B wave, and then down for the C wave. So that's back down here for wave 2 over here. So we know that's the possibility. But at the same time, it is pushing up, and we can sort of run with that. We just need to understand the risk. So what we were looking for is we're looking from this low here, moving up here, we're looking for 5 waves. And those 5 waves are completed now. This is wave 3 in here, wave 4 here, and then 1, 2, 3, 4, 5 into here. So this is done and dusted here. So we should see this fold back in here, you know, 690. We don't want to see it coming below the 680. If it comes below the 680 here, then well, technically this low here, but if it comes back into this area here, then we know that this is a B wave here, and this will be 5 waves in a C wave here. But if we see a move in 3 waves back here, and then we find support on the 700, then we'll be looking to add to these positions here again as well, and all up through here, because we'll be moving into the 3rd wave going up here. And this is why we're having a crack at it, because we don't want to miss it. You know, we don't want to get too far up the tree and you know, not have positions in this market. So look, if we're just going to observe this, if I've got this on a smaller chart here, yeah, I do. So look, this is the 5 waves that we're chasing up here, and very nice too in terms of 1, ABC for 2, 1, 2, 3, 4, 5 for the 3rd, ABC for the 4th, pulling back to the 4th wave 1 lesser degree, and then you can see quite a clear 5 wave structure up here, and there'll also be 5 in here if you want to pull that apart. So anyway, the 5th wave in this area here somewhere, and then we're looking for an A and a B and a C. If that's the case, and then we get support on the 700, I suggest buying more on 700, 710, 720, and 730, and then we can just leave it until we get to the midpoint as such. So right, so it will take about 2 sessions for this to play out. No need to jump the gun, and also bear in mind that the risk here, this can be 1, 2, 3, 4, and 5 down through to here, and then we have a negative market at that point. So it's just a bit of a wait and see. So there is risk in all of this. The corn market. Yes, well, this is the best wave count fit that I've got, and it leaves the wave 3 here, the wave 4 here, and the wave 5 moving up here. So the same with wheat. We just counted 5 waves up. We're doing the same here as well. It can push up a little bit further to make wave 5 of wave 1. Then we'll have the A, the B, and the C. So basically, soybeans doesn't have a good correction at 1500 yet. So wheat could do that because we can't confirm it, and corn can do that as well. So and coffee as well. So these markets can correct, and we need to be sort of very careful about this situation that we're in here. Just because they're high, we could be getting into a trap. So do not overtrade. It's not the time to do that. We just need to sort of get through this in a sort of a justifiable way, to catch large trends. It can take 2 or 3 times to get into those trends, and that it takes a bit of experience in times, because you have 2 or 3 small losses and you're a bit hesitant to go into the next one. So but they are worth catching, and I don't want to miss this, because at this stage here as well is that this is a nice classic pattern here in terms of the market's come up and found its resistance, and then developed it as support. It was resistance, and now it's got support, and now it's moving off. So realistically we should be in it, but we got to use our experience and think to ourselves, what's the Elliott count, what are the probabilities, and so forth. And this move up through here, it will run out and fold back, and if it falls back in a corrective manner in here somewhere, then we'll look to move into it, or if it finds support on top of the 530, we'll be definitely going long from that point. Otherwise we'll be looking at this situation here. Alrighty, the coffee. Okay, now just on the 4-hour chart here, we were considering this once again. We're sitting on a major level here as well, as it's more support than resistance, isn't it? But using the Elliott count here, we would look at this as being wave 1 up to here, and looking at these little 5 waves here. This move down through here, it does count best as a 5-wave structure, and currently that move up through here is in 3 waves as well. So we would only go long if 210 became a really solid support. Okay, so don't move into it unless that occurs. But if the wave count is right, then we'll be seeing this market come down further as well. So if I can just drill in here for a moment, this is the top here, the wave 5 of wave 1. So 1, 2, 3, 4, and 5 down to here. This is in it's in 3 waves moving up here. It could turn into, this could be 4th, and it could turn into 5th up through here. And if that's the case, that 210 there is a nice solid support, not when it breaks up there, but when it comes back and tests it. That's what you want to find a long trade on the 210. Otherwise, we'll be coming down through here. And I don't want to short it being above the closest largest number, because that just puts Lady Luck down the drain, doesn't put her on our side. The sugar market. Okay, now I just want to go over the bigger picture here. Now, originally we had this as wave 2 here, so all the way up for wave 1, back for wave 2, and looking for wave 3 to move up. Now, that's sort of okay, and it fits, and it even fits in this move up through here. But this move up here can also be counted as the 3rd wave up. So this can be a 4th wave here and a 5th wave up. And the reason for that is that this counts across here as quite a nice triangle. Let me explain. So a triangle is 5 waves, and they are counted as an A, B, C, D, and E. Each leg within a triangle is in 3 waves, and this is what sort of secondly drew me to this count, is because start off here, this move down through here is in 3 waves. This one's not so much, but this one here is, and more so this one here is in 3 waves, because we didn't really, I called it wave 1, but we didn't really get a nice clean impulse wave up here. And then this move down through here was definitely in 3 waves, so that made me sort of bullish on this side. And now this this move up here seems to be impulsive. So we've got a couple of things here. We've got the overhead trend line as resistance, comes in just above 1780. If this is a wave 4 triangle, then our target will change to $19 rather than $20. But we'll have a look at the wave count as it moves up, because with a triangle, normally the distance that this one does here is normally the distance this wave will push up through here. But just drilling into that now. So this little move that we've had overnight up through here, it does seem to be impulsive. So if it is impulsive, that means that this little 5 wave will produce another 5 waves. So it should move up into this area through here. So this is what it looks like. That little impulse wave on the 5-minute chart, a little bit tricky to count, but it's kind of there. And then we've got this ABC here back again as well. So look, this could pull back further into the 1715 here, but what it does mean as well, if this is an impulse wave here, that means we can move our stops up to the 1730 area here, put it at 1726, but you can move them closer if you like, because any breach of that would give us a different wave count. So what we're looking forward here is to add positions. We're looking to add positions on 1765, 72 and the 80. And we also want to be adding above the 18 here as well. And if you can afford it, then also scale in on 10, 20 and 30 through here, because we need to put the contracts in here early if our target's only going to be up at the $19. And even if it is at the $20, then we still need to get them in reasonably early as such. So but otherwise one contract is fine, whatever you can, whatever your risk management can afford to allow it to be. The orange juice, we're moving into the July contracts, and I'm still going to keep this as a wave 4 here. And I can see that the this can move down further through here, because this is like a little 1, 2, 3, 4, 5 down to here. So that will make it an A wave, a B wave, and a C wave here. Yes, it could develop further down through here, but we don't have any positions in this market at the moment, so it doesn't really matter. So we're just going to allow it to unfold, and let's see where it stops and what it looks like, and then if it's all okay, then we'll trade long again in this market. But the stochastics are pulling back on the daily quite quickly through here, so I'm quite sure this is just corrective. Alrighty, well that's it. So yeah, all good. Alrighty, cheers.